Okay, so on February 2nd, 2026, something pretty remarkable happened. A single 30-minute phone call completely reset the relationship between the world's two largest democracies. I mean, it sent shockwaves through the global economy. A massive trade war was just over, and a new strategic alignment was born. So let's dive in and break down how this one call completely redrew the map of global trade.
To really get what a big deal this is, you first have to understand the crisis that was happening. By late 2025, this number, 50%, was absolutely crippling Indian exports to the United States. This was the effective tariff rate. That means after you combine all the different punitive taxes, Indian exporters had to pay a staggering 50 cents on every single dollar of goods they sent to the US. As you can imagine, this brought a thriving trade relationship to a screeching halt.
And then, literally overnight, this became the new number, 18%. When President Trump announced this, it wasn't just a number. This single figure represented this monumental wave of relief for Indian industry. It was the signal everyone was waiting for, that one of the most intense trade winters in recent memory was finally over.
So the big question is, how on earth did they get from 50% all the way down to 18? What exactly did Prime Minister Modi and President Trump agree to in that pivotal call? Let's take a look at the core components of what's inside this deal. When you look at it, the sheer scale of this trade-off is just staggering. On one side, you have the US dramatically cutting its tariffs, which provides that immediate, desperately needed relief. But in return, India made three massive commitments. First, a complete stop to all Russian oil imports. Second, a pledge they're calling Mission 500, which is a promise to buy $500 billion worth of American goods. And third, a promise to start moving towards zero barriers for US products.
The reaction on the ground? Well, it was instantaneous, and it was explosive. The moment the news broke, the Indian stock market, the BSE Sensex, just rocketed up by over 3,600 points. This wasn't just a little bit of optimism. This was pure euphoria from a business community that had been staring into the abyss just days earlier. But that really begs the question, right? How did relations get so bad that such a dramatic reset was even needed in the first place? Because if you rewind the clock just a year, things looked completely different. So let's trace the volatile path that led us to this moment. So the year 2025 actually started out with really high hopes. You had a state visit, a new framework for a big trade agreement. Everything looked promising. But by June, the talks completely stalled over really sensitive issues like agriculture, and that led to a diplomatic standoff. And then August, that's when the crisis hit. The US slapped on two separate 25% tariffs, one for the trade imbalance and another to penalize India for buying Russian oil. And, well, the pressure worked. By the end of the year, Indian refiners were already cutting back on Russian oil, which is what set the stage for that dramatic resolution in February. And the tension really reached its peak in June of 2025. Prime Minister Modi publicly declined an invitation to Washington, and he delivered this really powerful line. This quote signaled a complete breakdown in negotiations. It was the official start of what everyone started calling the trade winter. Now, any deal of this magnitude has its winners, its losers, and of course some pretty significant risks. So while the market was celebrating, the accord itself is actually a very complex balancing act for India. There are clear immediate benefits, but there are also some very serious potential downsides. The primary benefit is crystal clear. This new 18% tariff doesn't just end the pain, it actually creates a brand new advantage. It positions Indian goods to be cheaper to import into the US than goods from its big manufacturing rivals like Vietnam and, most significantly, China. This is a huge boost for what's known as the China Plus One strategy, that global push by companies to diversify their supply chains away from China. And who are the most immediate winners? Well, it's these labor-intensive sectors. Industries like textiles, leather, and seafood were the ones that got hit the hardest by those 50% tariffs. So for them, this deal isn't just a relief, it's a lifeline. It allows them to start reclaiming lost market share almost overnight. But the risks, they're just as significant. Think about it. India is giving up cheap Russian oil, which could very well lead to higher fuel prices and inflation back home. That zero barrier promise, if that gets applied to agriculture, it could threaten millions of small farmers. And then there's the geopolitical angle. This definitely strains a decades-long partnership with Russia, which is a key defense supplier. It's a really high-stakes trade-off. This was never just a deal between two countries. It was a major move on the global chessboard.
This agreement immediately starts to reconfigure strategic alliances, and it sends powerful signals to capitals all the way from Moscow to Brussels.
So for Russia, it's a major blow. They're losing a top customer for their most vital export. For the US, it's a clear America first win, securing a massive new market while also achieving a key foreign policy goal of isolating Moscow. And for the European Union, it's kind of a wake-up call. It demonstrates the raw power of America's transactional approach to diplomacy and really forces them to reevaluate their own trade strategies.
So, while the headlines are bold and the market reaction is clear, you have to remember the deal itself was announced after a phone call. There was no formal, signed, joint text. And that leaves some dangerously ambiguous and absolutely crucial questions totally unanswered. I mean, what does zero barrier actually mean in practice, especially for sensitive sectors like dairy? What's the real timeline for India to deliver on all these promises? And maybe the biggest question of all, how do you even enforce a deal that exists mostly as a political signal? Right now, businesses and diplomats are scrambling to figure out these very details, and the answers will determine if this deal actually holds. So in the end, where does this leave us? This accord could be the foundation for a new, deeper, more prosperous Indo-American partnership for the 21st century, or it could be a massive gamble that trades long-term strategic autonomy for short-term economic relief. The only thing that's certain is that the stakes could not possibly be higher.